Are you financially prepared to actually create real financial freedom with your real estate portfolio? Maybe you're already there and you just don't know it yet. That's what we're going to talk about. What's that secret? How do you know? That's what we're going to talk about today with Marcus. All right, guys. So I've brought him a special friend and guest here. He's actually a repeat guest. He's been on before, Marcus Crigler. Now, if you guys don't know Marcus, if you've been in the real estate space, especially if you've been wholesaling, flipping, or even just an active manager or property manager, things like that, Marcus is the guy to know. Because how many times have we heard people saying, man, I wish I could get my finances in order with this? How do I control all these moving parts? How do I make sure I remain profitable? And especially right now, with the market that we're in, how do you get liquid so then you can get that money out to take advantage of things that many people have not been able to do for so many years? And there's an opportunity coming right now. And so that's what I want to talk about with Marcus today, because, man, this guy has been helping. There's hundreds and hundreds of active real estate investors, not just taxes guys. I mean, that's always the low-hanging fruit, right? But guys, he's been working on a CFO level with these companies, helping them really maximize profits so then they can take that cash, not only just reinvest in their business, but also create financial freedom for themselves, which is a big, big emphasis on this show. So Marcus, welcome.
Thanks. I appreciate it, Chris. I appreciate being a repeat guest. That means I didn't offend too many people the last time I was on. So that's always a good thing to know.
Well, if you pissed off anybody, it was so long ago that either they don't remember or they stopped following us and we didn't like them anyway. So it's
There,
perfect.
fair enough.
Now, Marcus, that's one thing I do love about you. You are kind of like a kind of a no BS kind of guy, which I love. But tell us more about your backstory for those that are new listeners.
Yeah. So, little backstory, just to catch everybody up. So I am a CPA. So that's kind of my trade, if you will. I got into this industry back when I was 22 years old. So I went to college, got the traditional degree as a CPA must do, right? I talk about it all the time with my kids and really so many others. If you're not going to school to get a degree that is going to turn into a license, you might want to rethink that school, because that's really what the only education I really got from school was the license that allowed me to learn. And what that allowed me to do was, at 22 years old, I got into a CPA firm. Lucky, so lucky to get into the CPA firm that their specialty was real estate investors, and not just any real estate investors. These were people that had tens of thousands of units. I mean,
Wow.
huge. You're talking about the people that they got a plane, but they don't put it on Instagram, right? Like this is the really wealthy people. I remember working with one of them the last year we worked with them. They bought 26 multifamily properties that year. So it was just like, that was the
By
scale that I
themselves, not like a
kind of, by
syndication, right?
themselves.
Yeah.
No. That was like they came in, and of course they raised capital, but not like the syndication model. It was a little different, but
Mm.
nonetheless, so I got in a cool business as a CPA, and I started to fall in love with real estate because I saw the power, right? Like,
Hmm.
I don't care who you are. You come out of college. I was, just got married, 22 years old, had a kid, had another one on the way, and a third one that was about to come that I didn't know about. And so we got three kids in 3 years, completely broke at 22 years old, maybe even negative as a CPA. And I'm looking at these people that we're working for, and I'm like, man, they've got it figured out, right? They've figured out how to make money in real estate and do it consistently. And so through the next, I don't know, we're 15 years, I'm 35 now. So 13 years, over the next 13 years, I've watched those that are very, very successful, tried to emulate those that are very, very successful. And at this point in time, I've gotten to a spot where, you talk about financial independence. I would consider myself financially independent at 35 years old. And that's all because of being able to sit behind the wheel and not just see the flashy Instagram articles, but actually see the financials behind all of this stuff. And so that's kind of the long story. fast forward to 2020, I got out of that company. I got such a great opportunity, got all the opportunity in the world, bought out of that organization and started BEC CFO and CPA. And BEC CFO and CPA is designed specifically to help real estate entrepreneurs make money, save money, and ultimately build real wealth in real estate, right? And we do it through all of the philosophies that I learned from being 22 years old, broke, watching these multi-million dollar real estate companies function at a super high level. And so from there, we just built BEC CFO every step of the way. We brought in a bookkeeping department that is a full-fledged bookkeeping department that we can now keep track of everybody's books, because that's the starting spot of this all, right? Got to start with good numbers. We've got an awesome tax department that saves people literally hundreds of thousands of dollars on a weekly basis. It's insane when we're looking at our metrics. And then we have our CFO department. A lot of what we've talked about so far is just not just taking the numbers, but also analyzing the numbers and making decisions on those numbers so that you can build long-term profitability and long-term wealth. And that's really who we are and what we do.
That's fat. And I know you guys do. You have really reputable work for sure. And so, by the way, if people want to follow your company or find out more, where would they find you guys?
Yeah, you could reach us at beccfo.com. Also, I post a lot on Facebook. I'm not a big Instagram guy. Maybe by the time this comes out, maybe I'll get a little better at Instagram, but definitely follow me on Facebook. Reach out to me. Send me a message if you have any questions. I'm always there to help if I can.
And typically, like, I mean, how many transactions or how many doors would it take for somebody that would probably be a good fit for a group like yours?
Yeah, that's a great question. So if you're somebody that's passive, and I would argue that to be passive, you're going to have to be pretty active in real estate anymore, right? So if you got 40 units or something like that, you're still probably pretty active. But we work
Mhm.
with really two types of people: somebody that's a high net worth individual, somebody that's making over $500,000, and maybe they've got a pretty decent real estate side business, right? We can come in and help them in a lot of different ways, from tax planning and bookkeeping and a lot of things that we can help with a real estate entrepreneur. But where we really made our mark is with that real estate entrepreneur that is making $300,000 or more a year, right?
Mhm.
And that's a good starting point where we can come in and we can really put a lot of tax strategy in place, a lot of financial strategy in place, and ultimately start building towards a much larger income and much larger net worth.
Yeah, great. Awesome. We'll be sure to put that in our show notes for sure. But yeah, I want to make sure that people
Awesome.
knew who you were, because I'm not going to be asking a series of questions here that I know our audience also want to hear too. But I want to make sure we at least know how to find you. Well, one thing I was kind of curious about, because obviously the traditional mindset, right? I mean, we hear it even sometimes among our friends, like, hey, you just you put your money away. I call it the slave and save method, right? Which is just save up your money, put it away in your IRAs or 401ks, save it in the crappy S&P 500, which makes almost nothing anyways, and all that kind of crap, right? I mean, when you saw these poor people with these large portfolios and stuff, what did you see that would have shocked the average person? Like, what did you see that was different about how they did money versus somebody else like us?
Well, I would say a couple different things.
Hmm.
First thing, if we're going backwards and we're going back to those years where these massive real estate businesses, one of the things that they did is they knew down to the penny what the return on their assets were giving. Every single asset. And if the asset wasn't performing at the level that it was expected to perform, they did one of two things. They either got it up to where it needed to be, right?
Hmm.
So they either improved the asset to the way it needed to be, or they recycled the asset. What do I mean by recycle the asset? Well, that just means they sold it, right? They found
Yeah.
something else. They said, hey, this return on equity, and this is something that I talk about all the time. And if you're a real estate investor and you own an asset, you should know that term and you should live and die by it. And I believe
Amen.
it, because your equity is what you are deciding to give up, or your return on equity is what you're deciding to give up for another return. So let me explain that, right? If you have a house that has $100,000 in equity in it and you're making $5,000 a year in cash flow, you're making a 5% return on equity. Well, wait a minute. If I can just take that $100,000 and go make 10% on that $100,000, I could go make $5,000 more a month or a year, right? Well,
Right.
let's add some zeros to that. And that's what they were doing. They were saying, hey, if I could sell this $10 million property that's making me 5% on my equity and go buy a $15 million property that's going to make me 7, 8% on my money,
Mm.
not only am I getting a increase on my equity, my return on my equity, but here's the other secret. And this is what I really started to figure out is when they moved to that $15 million asset, the other thing that expanded for them so much so drastically was their net worth. Why? Was because their net worth is going to compound much drastically faster on a $15 million asset than a $10 million asset, assuming it's a similar asset and it's a good
Right.
asset and good area, all that stuff. And let me just do the math for you, right? On a $10 million asset that goes up by 3% a year, you're making $300,000 a year, right? On a $15 million asset that goes up by the same 3% a year, you're making $500,000 in net worth value. That's $200,000 different in value gain just simply by having a bigger asset. And not only are you getting better cash flow, all those other things. So that's what I really started to look at and say, okay, wow, the impact of not just sitting there and buying something and set it and forget it. You'll hear the gurus say, set it and forget it. Yes, for a time period. But there's a time period where your return on equity no longer makes sense and you've got to recapitalize that portfolio.
That's right. Yeah, that's a big one. We actually just did a podcast recently talking about that same concept where I had a client that had a about 700,000 of equity in his property, in his rental property, $200 a month net profit. So when I told him, I was like, look, that's a 0.3% return on equity. You could literally sell this property, put it in CD and make more money. He finally kind of woke up. It took him a few years, but then he went and, 1031 exchanged it to other properties, in a better market. And then now he's like over 8,500 a month, right? The same equity and everything.
I have never seen somebody that hasn't gone through this process. People that go through the process and recapitalize their assets consistently are usually pretty good. But I haven't seen somebody that has not gone through this process of looking at we call it their REO schedule, real estate
Mhm.
owned schedule, right? If you deal with banks, you know exactly what that is, right? You've got to put that together for every bank that wants to give you a loan, right? We utilize it for analyzing portfolios, similar to a bank, but we're going to do it to make you more money.
Mhm.
And so when we look at those for the first time, most of the time, it's less than a 3.5% return on equity. Oh, I would say
Wow.
that's 80% of the time. Is it's
Crazy.
less than 3.5% return on equity when you look at those portfolios. And it's insane, right? It's not even
Yeah.
as good as the bank right now.
Or you find more people kind of like just not looking at it because they think, oh, interest rates are just too high. I'm not going to buy anything.
Well, I think you get into this. Well, first off, you get busy, right? It's
Yes.
boring, right? When you start looking at we're talking about numbers, right? And so it's much more fun to go out and do a deal, right? Like it's much
Mhm.
more fun to go out and run the numbers on a new deal. But what happens is when you forget about your old deals, that start to it's like milk, right? Eventually, it's going to expire. It doesn't matter if you open it or not. It's going to
Mhm.
expire if you forget about it. So you got to check the milk. And your portfolio is no different. You got to check it. You got to make sure it doesn't expire. And when it expires, you got to go get more milk. And you got
Yeah.
to fix that problem. And every piece of real estate for an individual does expire. It does. You've got to recapitalize it. You've got to do something with it. And guess what? That might mean a new individual takes it over and they start their life cycle with that piece of real estate.
Now, I know a lot of people might be hearing this like, this is just a lot of manage. I mean, obviously, this is where you probably come in, right? Because I know if you're trying to do it all yourself, and I've tried to do it myself, like especially with taxes and everything else, when you have multiple properties, it's just a headache and a mess. How do you make that simpler?
Well, I think the first thing is you got to realize that simple is never the process, right? If you've
Mhm.
ever, you're everybody, if you're listening to this, you're successful. You didn't get here because it was easy. You didn't get here because it was simple. You got here because you did the work, you executed on it, and you move forward. And here's the thing. What are we talking about? Is it simple? What
Mm,
we're not having to go. Let's just put some perspective here for a second. I'm asking you to put together a real estate owned schedule that tells you how you can make more money and improve your life. I'm
mm,
not asking you to go take bullets. I'm not asking you to go, go to war. I'm not asking you to, you're not sitting on the side of the road begging for change, right? I'm asking you to sit at a computer screen in air conditioned with some snacks, with, some headphones, maybe a little music playing in the background, maybe a game of football on the TV, right?
mm,
Relaxed, hanging out and looking at your portfolio. That's what I'm telling you to do. That's not hard. That's
mm.
not hard. We got to stop thinking as society that this stuff is hard. No, you're not willing to do it. You're sticking your head in the sand. And so you need a wake up call to say, hey, get your head up out of the sand. You're missing out on real opportunity here. And what I don't want you to do is I don't want you to wait 5 years from now and say, I wish I would have. I wish I would have listened to that podcast that random Marcus Crigler was screaming on saying, hey, look at my real estate portfolio because I could have made millions more dollars, hundreds of thousands of more dollars, whatever it is.
If you've been following this podcast, you're probably looking for great ways to create passive income right now, right? Well, we got you covered here with Central Lending. Central Lending specializes in alternative investments that actually are designed to create steady returns and long-term financial security for you and your family. Now, they prioritize transparency. They love, building those strong relationships, giving you that confidence and peace of mind, knowing that you have your money working harder for you, so you don't have to work so hard for that money. You want to learn more how to do that? Go to centrallending.com and check out what they've got today to create your passive income and wealth creation right now. Yes, for sure. No, I like that because I think mindset is a big shift too, and I know that's one thing you and I both battle a lot, right? Like for example, I know one thing that we've deal with a lot. I have my kind of 3-step process. I have my new book, Work Optional Blueprint, talking about get lean, get liquid, get out. Right, where
Mm-hmm.
obviously be a wise steward, make sure you're actually tracking your money and know what's going on with it, both incoming and outflow. Get liquid means you have liquid cash, which I'm sure we're going to talk about here. And then, of course, get it out. Like when you get that liquid cash, you get those profits, and you get it out into other investments to bring in more income, right? So tell me about this. Like, I know you see this all the time with a lot of real estate investors. Like, how important is it to be liquid with cash, not to lock it up or whether it's in equity or in places where you can't touch it or just always reinvesting in your business constantly to the point where you don't have the money? How important is it to have liquid cash?
Well, I think it's the number one deciding factor in your long term success in any business, right? It's
Mhm.
you can look across every industry. Um, Anybody that's been in business for longevity, it's been because of cash. Some people will say cash flow, and I will say that yes. I get into this kind of piss and match between people that say, well, cash flow is more important than cash, or cash is more important.
Mhm.
Let's just for the sake of argument understand that those are both very very important. But what I also understand is that Amazon didn't cash flow for the first 14 years of business, and they're the biggest company in the world now. And so they did that because they raised a ton of capital, they had a ton of cash, and they were able to outlast the competition and get to where they're at. And there's obviously a lot more reasons to it, but
Of
one
course.
of the things that you've got to realize is that to get to where you're consistently cash flowing and you have a consistent business, and where you maintain that consistent business is to have cash reserves. There's no business, real estate is especially susceptible for it, but there's no business that doesn't have the ups and downs. And
Mhm.
if without cash, liquid reserves, you don't have the ability to manage those ups and downs, not mentally and not financially. Right. And so
Yeah.
if I could take away the financial pain of that ups and downs and say, okay, well, at least we've got reserves we can handle. Now, all you got to do is kind of figure out the mental part of it. You can figure that out. Right. Like we can solve for that,
Yeah.
solve for finance first. And then the mental part comes into it second.
How do you help someone with the mindset where they think, and I saw this especially in the early 2020s, right? It's happened all the time where they're saying, I can't have cash sitting on the sidelines. I'm going to lose inflation. I just got to get it all out. How do you help somebody reverse that mentality? Say, no, you need the 1-2 punch of offense and defense here.
Sure. Here's the best thing that I can tell people. I have never met somebody that consistently makes $1 million a year without $1 million in the bank. And I use bank as a short term liquidity,
Yeah.
$1 million in liquidity. See, plenty of people make $1 million in a year that
Hmm.
don't that doesn't have that don't have $1 million in liquidity. But I don't see people making $1 million a year with less than $1 million in liquidity. I just don't see it. It's not doesn't happen. I don't see people that make $10 million a year that have less than $10 million in liquidity, right? People
Yeah.
that are making consistently $10 million a year end up having liquidity above and beyond what they make. Guess what? I see a ton of people making a couple $100,000 a year and they have a couple $100,000 of liquidity. And they're like, hey, I don't understand why I can't grow my income. I'm like, well, I don't understand why you can't grow your income either. But here's what I can tell you is that the people that are making $1 million a year, they've got $1 million in the bank generally. The people that are making $10 million a year generally have $10 million in the bank. It's just how it works. I can't explain it. So if you want to be like the people that are successful and have come before us and have done it, just do it. We don't have to always have a why. Like, we don't always have to say, hey, this is the exact reason. Like, I can give you probably some accounting jargon reasons why this is why it happens. But the reality is, you just need to do it. There's no argument. And I'll tell a story if we got time, Chris,
Yeah.
about this. So I was working with a client back in October of 2023, and they're a real estate entrepreneur, great business owner, great mentality. Prior to that, we'd worked for 18 to 24 months or so, and working as a CFO, one of a strong CFO client of ours, and somebody that takes action. And so we, kind of took him to where he was at, and I told him this exact story. Hey, you need to have $1 million in the bank if you think you want to make $1 million a year. Like, first step is let's get there, and let's get liquid to do that, because what I know is liquidity creates opportunity. Fast forward to 2025, we're like in the $800,000 range of liquidity of where
Hmm.
we were at, and so we're in a pretty good spot. October comes, he calls me, he's like, Marcus, I'm shutting it all down. Like, whoa. We have a conversation. I listen to him, 20, 30 seconds. The world's coming to an end. If you remember to October 2023, the
Hmm.
winds had come out of the sails, right? And so now we've got to really be good business owners. We've got to really get into real estate, and we're not going to have the economy to help us. We got to be good at it, right? And
Hmm.
he was scared. I'm like, and I listened to him, and I sat back and I said, okay, you've put all your effort into building a team. You've you've built 800 plus $1,000. It's not the million, but $800,000 of reserves is not a bad spot to be in. And your cost of keeping your business afloat right now, you've got tons of time based off of where we're at reserve wise. If you're done with this business, wrap it up. Be done. That's cool. But
Yeah.
don't be done because you're afraid of the market, because this is where you have opportunity, because you have the reserves in place. This is what we've planned for. This is game day.
Hmm.
Last month, we're sitting in so July. So we're sitting at the end of August, beginning of September 2025 right now. July of 2025, they did $900,000 in revenue in their group of businesses in
Nice.
that month alone. And so what they did was they took that opportunity because they had that liquidity, and they had to get over some of the mindset stuff of, hey, I'm scared. But once they saw that they had the liquidity, they said, okay, I'm going in. And now they've been able to capture market share. When people were running out of the business, they were running into the fire. And
Right.
now they've captured a ton of market share. And now they've got a business that $900,000 in revenue. Okay, cool. We put 35% to the bottom line. That's after paying owners and everything. That's not
Hmm.
just like, that's real profit. And so
Right.
we didn't just scale this thing to scale it. We scaled it, and they did a heck of a job making it profitable too. And I think that's the lesson of reserves. Is reserves is not what you're missing out on, that 10% cash on cash reserve, or your 10% cash on cash return.
Mhm.
It's the opportunity to potentially get into something that's bigger and sustain for longer while others are going out of that thing. You're going into it and capture a ton of opportunity. For some of you, that's not going to be the business, right? I know we're talking to a lot of people that have passive portfolios, but guess what? It's the same philosophy. If you've got the reserves, you've got the cash available, and these properties go on sale, which they do, you have the opportunity to go and scoop them up for, I'm seeing people getting properties right now for less than I've ever seen, or I've seen in 5 years. Not ever,
Mhm.
but then I've seen in 5 years at auction steps and all these things. So there's some discounts out there and there's more opportunity to come potentially. And so when I look at reserves, I look at that as two things: keeping you in business and creating opportunity for you to capture more of it. And, I just can't think of any other more important focus to somebody that is in business than that. Is
Yeah.
to be able to seize those things.
That's huge. Well, and that's something that I think applies way beyond real estate businesses. That's any business for that matter. I mean, if you're prepared and you're ready, especially when there's a recession or some kind of slowdown in your industry, and you're the one that's actually poised and prepared to gobble that market share up. I mean, most people when they go into recession, they're already broke, which is why they're in a recession.
That's
But if
right.
you're the one that's doing the opposite, I mean, that's something that could create massive, massive wealth, not just today, but way into the future.
Totally.
Man, love it. Now, one of the last questions I want to ask you, because we were talking about this before we went on the air, because you did a post really, I loved just how it was thought provoking, right? Because, like you said, some people could be financially independent. We already talked about that earlier a little bit too, where they were probably already there, they just didn't do their numbers. But it's not just the numbers; there's a mindset piece to it as well. Can you tell us more about that? Like, what do you think people might actually have as an obstacle to their own financial independence?
Well, so the post you're referred to, I think, and some of you guys may consider yourself in the rat race or not, but I think the principle still applies. Is most people don't stay in the rat race because they're broke. It's because they're afraid of being broke again. And I think so much of what you are, how you live your life is out of either fear or out of abundance.
Hmm.
And I think so much of that mentality comes down to your financial picture and understanding it. And so, I think if you want to be in the rat race, I think, and by the way, people love it, right? I know people that like they make great. It's not about making money. It's just they love it. It's like a hobby to them. Great. But if you're one of those people that you're like, I'm so sick of this. Like this is not the grind I want to do. It's you need to look at yourself first. Like it's only first things first. Like it's internal. What do you actually need to be doing? What are you afraid of? What are you missing out on? And by the way, some of you might have a gap. You might have a gap from where you're at to financial freedom. But if you don't like actually look at it and actually sit down and analyze it, you're going to be in the rat race all the time because you might actually be free and you don't know it, or you might need to do a couple things, switch a couple things around, and you could be a lot closer to than you think.
Yeah, that's something I think you guys need to like ponder on again and again, right? Is what's that real thing keeping you in the rat race? Because it may not be the money. It might be something much, much more, depending on that scarcity mentality or that fear mentality that you're dealing with.
Well, we know what it is, right?
Yeah.
We all have the same points, right? Like we all want to be liked, we all want to be good looking, we all want to have a hot wife, a hot husband. We all want those. We all want to be seen as the person, right? We all want that piece, and so much of um people staying in the rat race is because they're so focused on, hey, if I stopped working, my identity is gonna stop, right? And so like, maybe my wife doesn't respect me anymore. Maybe my colleagues don't respect. There's so much of that that's out there where you've got to say, shit, all that stuff. Like,
Mhm.
let's figure out what is going to, because all right, to tell you guys, we can get really deep here, but like we got one of these things that I know of. And so like you want to work until you're 100 years old, do it. But I don't know if anybody ever died saying, I wish I'd have worked a little more.
So true. Well, Marcus, last question for you. And this is something we ask all of our guests that come on the Money Ripples podcast, but we talk about creating that ripple effect through people's lives. So, Marcus, in your life, what do you feel is your ripple effect you're here to create?
Tell what I know at the top of my lungs. I mean, I won't claim to have it all figured out every single day, but I can tell you I'm trying to figure it out every day. And I get a really good opportunity to see the insides of businesses. And again, it's not from the Instagram articles and it's not from the Facebook post. It's from the actual revenue, cost of goods sold, gross margins, expenses, net profit, cash flow, all of these things that I see and what's working and what's not. And so I think the biggest ripple effect I can do is get on podcasts like this and try to explain to people that this isn't philosophy. This isn't just, hey, we could do this. This is the stuff that works. This is the stuff that you will have to go through in order to have a successful business, successful life, successful, you know, wealth, right? And you're gonna
Yeah,
have to go through these things. And so my goal is to just say, hey, learn from the people that have had the pain. I've seen the pain. This is what keeps them away from the pain. Go do those things. And if I could do that, it worked.
I love it. That's a great cause, man. I love it. And no, I know anybody else here already got that from you. That's the thing. It's like it's just who you are. It's who you show up to be. So I always appreciate you being that way, Marcus.
Awesome. Appreciate it, Chris.
Well, everybody, be sure to follow Marcus, of course. We got the link in the show notes there, so you guys can definitely follow him. Reach out, especially if you feel like this is who you are. If you're that real estate investor, whether it's your property managing, whether you're a wholesaler, flipper, whatever it might be, and you're saying, I need somebody on my team to help me maximize what I've got here. Marcus and his team is exactly who you need to be talking to. So be sure to check that out. Guys, remember, in the meantime, we can theorize and philosophize all freaking day long, but until you actually do something, your life will remain the same. So if you want your life to be different, do something different. Go and make it a wonderful and prosperous week. We'll see you later.